Hello, everyone. I'm Ernie Humphrey, the CEO of Treasury Webinars. I would like to thank everyone for taking the time to join us for our webinar today, Modernizing Accounts Payable, 10 Ways Automation Impacts the Bottom Line. I would like to thank our webinar partner today, Mineral Tree, whose strong commitment to thought leadership helps us make this webinar possible today. Leading companies are leveraging automation to redefine accounts payable best practices. Automation is allowing companies to mitigate and eliminate pain points relative to supplier relationship management, invoice processing, and payment dynamics. The strategic outcomes of accounts payable automation include allowing discounts to be captured, improving employee productivity, removing errors caused by manual input and processes, mitigating payments fraud risk exposures, and delivering a level of transparency and visibility that facilitates a culture of continual improvement. Today, you will discover 10 specific ways in which accounts payable automation can impact your company's bottom line. Accounts payable can and should be a strategic function in today's world at companies of all sizes. Before I delve into the content, I'm going to offer a few quick words about Treasury webinars, cover a few housekeeping items, then I'm going to review our learning objectives as they offer the pillars of our value proposition to you in investing an hour of your valuable time with us today. Treasury Webinars offers webinars designed to empower Treasury, accounts payable, and accounts receivable success at companies of all sizes across all industries. We only do what we do best, webinars. The exciting housekeeping items. For those of you interested in CTP credit, you'll need to answer all the polling questions and remain on for the duration of the webinar. If you have any questions regarding CTP credit or would be interested in obtaining a copy of the presentation from today's webinar, please send me an email to ernie@treasurywebinars.com. Please note I have put my email in the chat area of your GoToWebinar control panel. We'd love to hear from you today, so you can ask your questions at any time in the questions area of your GoToWebinar control panel. I'll do my best to get to your questions if we have time for a Q&A session at the end of the webinar. If I do not get to your question, I will reach out to you directly after the webinar to address your question. Finally, we appreciate your consideration in taking a short survey at the end of the webinar today, as we always strive to improve the ROI we offer our event attendees for their valuable time. Now our learning objectives. After the webinar today, we'd like you to be able to identify opportunities to leverage AP automation to mitigate invoice processing costs at your company, identify opportunities to improve supplier relationships and productivity across the enterprise by leveraging AP automation, identify opportunities to take more control of how and when you pay suppliers by leveraging AP automation, and to discover 10 specific ways the bottom line is being impacted at companies that have invested in accounts payable automation. Another one of my objectives for today's webinar is for you to take an action. So whether that action is to have lunch with someone who's in AP or Treasury, whether it's going on LinkedIn, reviewing one of the resources that I share with you, or reaching out to me with a question, that is really a big piece of the value that I offer my webinars. I think I inspire folks to take action. I'm not going to be able to answer all of your questions or solve all of your problems regarding accounts payable issues that you have at your company. Hopefully, I'm going to be able to guide you to specific resources, ask the right questions, and get you access to the resources that you need to begin your journey to best-in-class accounts payable at your company. So how are we going to accomplish our objectives today? We'll always like to kick things off with the evolution of accounts payable, because I think it's important to know where we've been and where we are now and why. Just because we're seeing such a great explosion in the interest in accounts payable, which is long overdue. Part of that will be why AP is getting so much attention from finance leaders and why that's deserved. We'll talk about what AP automation done right looks like. We'll talk about supplier relationship management, the challenges and opportunities. And this is an area that I think is finally getting more attention from us in the thought leadership space regarding the benefits of accounts payable done right. So in the past, I don't think much attention has been paid to the impact that accounts payable has on supplier relationships. And what we'll see is that better supplier relationships allow us to take more control of our payments, which means the timing of our payments, which is extremely important, to take advantage of discount opportunities, and then also to work with our suppliers to get them to pay in the ways that are most beneficial to our company. We'll talk about invoice processing challenges and opportunities, and then we'll talk about the 10 ways AP automation done right impacts the bottom line, and I'll give a few closing thoughts and resources. I'm going to give you a little warning. We're going to have a few more polling questions that we would normally have, trying to make the webinar a little bit more interactive and just see where the audience is relative to some of the topics that we're going to talk about, so I can allocate my time effectively during the webinar today. So first off, we're going to kick off with our first polling question today, just trying to get a sense of where your primary challenge is within the AP company today. So pick your greatest challenge. We have not enough resources, your workflows are inconsistent, your reporting is limited, no audit trails, make vendor inquiries difficult, or maybe you don't know, you're not deeply involved in the accounts payable function at your company. I appreciate everyone's consideration in answering all of our polling questions here today. Those of you interested in receiving CTP credits, you'll have to answer all of our polling questions here today. So I'm going to go ahead and leave the polling question up for another few seconds. Then we're going to go ahead and take a quick look at the results. I'll offer my initial thoughts on the polling results, and then we'll get back to the evolution of accounts payable. So let's go ahead and close that, and we're going to go ahead and share the results. So first thing that jumps out of me is 18% of you say, I don't know. So you have the easiest takeaway from the webinar today, which is for you to find out. So if you are not the AP leader, I strongly encourage you to go over to your accounts payable department, just sit down, have a conversation, just ask them this very question. So that will really open up that conversation. Then potentially you can share some of the content from today's webinar, have a conversation. If you don't know, where are we at in terms of accounts payable automation? Have we looked at this? So let's sit down together and figure out how we can deliver more strategic value from accounts payable. 23% of you reporting is limited, and that's what I see is we'll talk about as a real benefit of accounts payable automation. The reporting allows you to identify trends in payments, but also trends in issues as well with your suppliers. So it's very important to have proactive supplier relationship management, and this can save hours, days, months of time. So when we look at the research results, I've seen some research results that show that in some organizations, AP professionals spend 43% of their time handling supplier calls, and that is certainly should not be necessary in today's world. And then workflows are inconsistent, and we'll talk about that, how automation can help us automate those workflows, remove manual processes. And then, of course, 32% is not surprising, it's the top, not enough resources to manage all the volume, all the complexities. The good news is that AP automation done right can really give your employees their time back. So it's not necessarily that I ever talk about a big benefit to AP automation to reducing headcount. What I like to focus on is how accounts payable allows our AP professionals to focus on more strategic tasks so we can handle those volumes, those challenges, those complexities, especially if we're in an acquisition mode or we're doing payments across borders and things, so those challenges. So again, I like to look at the value of accounts payable. On a big benefit is giving the time back to the employees that we do have, and letting them focus on high value activities. So really quickly, the evolution of accounts payable. I think for a long time, we were in the back office stage, and I would argue that was the general consensus here, at least until the 1990s, if not into the late 1990s. And then I think we started to move towards a point of collaboration. And then I think only through the past couple years have we seen the focus where it should be to looking at accounts payable as the intelligence hub. So for me in accounts payable, when I worked in Treasury, it was viewed as a back office function. But then as I took more control over the Treasury area, I started to look at the opportunities that we have in terms of our supplier relationships and automation as well. Again, I think technology has really been a driver here. And then, of course, the financial crisis that we had didn't hurt. So back in 2008, there was more of a focus really on cash. But I think that focus was really tilted towards accounts receivable on that side of it. So I think that was an opportunity lost. But I think we're definitely taking advantage of that opportunity now to see all the great strategic value that we can get. And so the next few slides I think are very encouraging to me to see how far we've come, but yet how far we need to go. And as far as your company is concerned, where you stand depends on where you sit. So those of you who might be viewed as a back office function, it'll be encouraging for you to see how other AP departments are viewed, and this may be something you want to share with your CFO, your treasurer, your controller. So I was very surprised, pleasantly surprised to see 45% are viewed as very valuable. We have 11% exceptionally valuable. So now we're at least at 56%, right? That are starting to see the value and not just that back office cost area. And then it's still too big of a number, but I was pleasantly surprised to see that this was 13%. So part of this is perception. So we need to work on that perception. The good news is that there's so much that can be done, and we'll go walk through those 10 ways you can impact the bottom line. I guarantee you, if you go into the office of any CFO, no matter how skeptical they are, if you walk in there with that slide and you can talk through the 10 points of improving accounts payable at your company, that your CFO is going to pay attention. So here's some more support of kind of what's going on and how would we have proof that AP is becoming more strategic. We have 61% are involved in P2P selection and management. So hopefully some of you on the call are in this process right now. You're looking at AP automation solutions, or you're thinking about whether or not you should look. I think it'll be clear after this webinar that it is absolutely worth your time. 54% driving financial visibility, which is great because you can't manage what you can't see. So I think, as I mentioned before, the visibility into the payment patterns, visibility into the communication with the suppliers, and removing asymmetries of information between our suppliers and our AP staff is really going to mitigate the need for a lot of these calls. Related to that, again, supplier relationship management. So just all the way from supplier onboarding, that's our first interaction with our suppliers. We need to manage those relationships, not only with accounts payable, but finance should be involved with our suppliers, especially our key suppliers. So we don't want our CFOs and treasurers completely just involved in mitigating issues. We want our CFOs to have relationships so we can partner with our suppliers, so we can take control of when we pay and how we pay, and then when we pay and how we pay is also related to supply chain finance. So just some motivation for you that our CFOs or might need to communicate the importance of AP to CFOs. This is why it matters. Why now? This is why we're seeing that shift. We have real-time data for better cash management, better cash forecasting for our payables items. Companies realize the value of mitigating accounts payable processing costs. We'll get into that much more later. Again, companies are realizing the strategic value of improving those supplier relationships. Again, owning how and when you pay suppliers. Payments fraud is still rampant, and I think that's something that's still out there. So there are risks associated with how you pay suppliers, and the most targeted payment type are checks. So one of the other takeaways that I'd like you to take from this webinar is go find out your portfolio of payments, see how many checks you're writing, and find out why you're still writing checks. In addition to being risky, checks are also 10 times more costly to process than ACH payments, and even more than that for other types of electronic payments. And finally, the right technology is affordable to any business size and is cost effective if you look at all the dimensions of the value proposition, especially important if you are a growing company. So there's going to be value for you to automate accounts payable, but it's going to make those integrations of acquisitions and those complexities with international payments and suppliers are much easier to absorb. So now we're going to go ahead and ask our second polling question. So just trying to level set a little bit, asking you to share with us where your current company is currently at in terms of automating accounts payable. So run the gamut. You're just starting, you're evaluating solution, you have your short list, you're implementing or already have AP automation in place, or E, I don't know. Again, I appreciate everyone's consideration in taking the time to answer our polling questions. Also want to take this time to remind you that I can still take your questions in the questions area of your GoToWebinar control panel. So I'm going to go ahead, leave the polling question up for another few seconds, and then share the results, give a few quick comments, and then we'll dig in to the accounts payable process a little bit for those of you who have never been down there in the weeds. So let me go ahead and close that. So looks like we've got 40% of you that are you don't know and just starting the discovery phase. So hopefully those of you who don't know, let's find out. And just starting the discovery phase, hopefully we're motivating you to take that a step further and really invest that time, or you're currently evaluating those suppliers. So hopefully we'll give you things to look for. And those of you that are implementing or have an AP automation solution in place, it's I think one of the most important aspects that I can offer you is to look at all the dimensions of the value proposition that I outlined earlier in my 10 ways impacting the bottom line, and make sure that your solution is offering these to you. So make sure that you have all the functionality unlocked, that your users are using, the functionality they have access to. That's important. I've seen oftentimes companies invest in technology and it's just not getting utilized to drive that ROI. So those of you who already have that solution in place or implementing, I take that slide with the 10 aspects, and I would challenge my AP automation solution provider to say, okay, how are you going to help me do this? And then those of you that are looking for suppliers, these should be some of the criteria that you're looking for, in addition to, of course, customer service, which is absolutely critical. So thank you very much, everyone, for sharing your information with me. So those of you who have not done this or aren't in the weeds for accounts payable, I just have my little diagram here. I thought it's interesting to see that if you've really never looked at your process, and there are a lot of people involved in the process, there are a lot of systems involved in the process. And so people, process, and systems, there's an awful lot more than you would think. So there are a lot of areas for things to go wrong, but the good news is there's also a lot of areas where we can improve on things and make them go right. So again, I talked about this. We need to pay more attention to the supplier area, just onboarding suppliers, getting them the information they need, the tax forms, even verifying that we're allowed to have them as suppliers, getting them approved, vendors, payees verified as legal entities. We need to make sure this workflow is smooth. As some of you mentioned, your priorities improving workflows. So those of you who haven't outlined this, look at all the workflows that we have here. So we want to mitigate those manual entries, how we get those, PO matching, how we get the payment out the door, how we get the payment to our suppliers. So there's a lot of different areas here. So the main point of this slide is AP is pretty complicated. And if you don't have all the people, process, and technology, aka systems, I would strongly encourage you to go through this exercise and map all these places, and you'll be amazed where you'll see points of opportunity, points of inefficiency. And then as you involve more of the folks in AP in putting this diagram together, you'll start to understand their language and their challenges, and you'll be able to look at these areas of improvement together, and then just makes that business case for investing in AP automation all that much stronger. So let's just take a quick look at what AP automation looks like. So I just like the way this is laid out. So courtesy of our webinar partner, Mineral Tree. I think that sometimes you have to keep it simple at the top, and then you just start looking in. And then as you're looking at that AP automation solution, you want to make sure that all of these points you're able to do this, and if not, you need to figure out why not. So first step, obviously, capture. So what does that mean? Many ways to capture. You want to be efficient. You want to make sure that you are exchanging electronic documents efficiently. So if your suppliers don't use electronic documents, you need to work with them because you want to be exchanging documents electronically, and then you want to link the invoice documents with invoice data. So you need to capture. Automatic invoice capture, extremely important, saves a lot of time. One of the things we'll talk about is one of the benefits of AP automation is it allows you to process your invoices not only more cost effectively, but more quickly. So being able to do so more quickly allows you to take advantage of discount opportunities, and then also enables you to potentially negotiate discount opportunities. So capture, approve, route, invoice for approval. So you want to make sure that that workflow is automated. And so I caution people to say there is the normal workflow and then there's the offshoots of workflow with the exception. You want to make sure that you optimize all paths that an item can take. So it's often those offshoots, right, that get out of the main workflow that are what cause us to spend the most time. So we want to make sure that we take care of those. The good news is a lot of these solutions allow you to create customizable workflows, and then along with those workflows include automatic uh, notes and maybe emails that are pushed out. Also allows us to get approvals on the road, so we're not hampered when someone is traveling. And then kind of you can actually embed rigorous controls into the settings, and then you have that audit trail and tracking again. And then you can start to see where those bottlenecks might be, who's doing those, look at those root causes. And then again, one of the things we're going to do with our smoothing our approval process, we're going to impact the productivity of people approving invoices, especially our managers, maybe our CFO. Isn't their time extremely valuable? We want to give them that time back for sure. So that's extremely important. And then authorize, and when you say authorize, you're going up that chain a little bit more. Just a few things to consider. Again, I talked about this on our last slide a little bit. Easy on-the-go payment authorization. Of course, you want to keep things secure with segregation of duty and those payment limit alerts. So your the way you have your internal control set up, that can be mimicked in the system. And you also probably want to look at a two-factor payment verification. So additional level of security against unauthorized or fraudulent payments. So authorize and then pay, which is where we've probably fallen short until I think the last year or so in looking at accounts payable. So we want to look at how effectively we are paying the invoice. So we want to look at how effectively we are controlling how and when we pay. So we don't want to stop once it's approved, then that's where we stop looking at our efficiency. We want to look at pay. You can send payments directly and security. Payments can be sent from your own account. There's two-way real-time synchronization, and this is tremendously valuable. Remittance details transmitted automatically, so vendors know when, why, and how they've been paid. So to me, when I was in Treasury, this was very important to me, and the reason that I wanted to check and wanted to deal with my lockbox was I needed that remittance detail because application was a huge nightmare. So when you're communicating the value of switching to electronic payments from a check to your suppliers, this is going to be extremely critical. And so in some cases, if companies do this, they can actually remove the need for having a lockbox at all. And so this is tremendously important. And it also, if done right, if your suppliers work well with you for their company, that makes their accounts receivable processing costs go down. So that's a huge goal. So we talked about supplier relationships. So let's go ahead and benchmark you in the audience here today. How would you characterize the overall state of your company's relationships with suppliers? Of course, we run the gamut here again. Not good, poor communication, constant issues, not good but getting better, acceptable, good, we communicate and collaborate effectively, or E, I don't know. So, of course, I would love everyone to answer our polling question here today. A reminder for those of you who are interested in CTP credits for today's webinar, you'll have to answer all of our polling questions. So in order to be mindful of our time, I'm going to go ahead and close the polling question here in a couple seconds. Then we'll take a quick look at those results, and then we'll make a little color commentary here, and then we'll dive in a little bit and start with that accounts payable process and look at supplier onboarding pain points and how accounts payable automation can deal with those. And then we'll talk about the value that that can bring to our company. So let's go ahead and close that. Let's go ahead and share the results. So again, higher than I would expect, 14% don't know. So if anyone on the webinar, this is a takeaway. If you don't know how good your relationships with your suppliers are, extremely important. When I was in manufacturing, our relationships with our suppliers were just as important as our relationships with our customers. So if you start to look at the value that you can unlock in terms of controlling how and when you pay it, it's just tremendous. And then a lot of the technology solutions, again, they eliminate the asymmetry of information. I used to be on supplier calls, and what I found most often was it was because there was an asymmetry of information. There was no collaboration or one version of the truth. What was owed? When was it owed? Some providers have supplier portals that they support. So you want to get to somewhere where your staff and their staff can be looking at the same screen with the same information. So there's no misalignment on what is owed, what was paid, what has been paid, discounts available. You can pull up the documents, show the contracts. Extremely valuable. So 41% of you acceptable. I think there's always room for improvement there. So I would go and ask your AP folks, if you're not an AP person, what can we do to make things better? So I would, for everyone, I would look at how much time is spent with our suppliers. What are the issues? Can we do a better job in identifying trends in terms of issues that we have? Can we do that with specific suppliers, maybe the industry of suppliers, maybe in certain countries? So again, as we give our AP folks their time back, these are the types of things that they can be doing, which can really add value to our company. So thank you very much, everyone, again, for your sharing your information. So just a little note on some onboarding pain points, because I don't think sometimes these are considered, and we need to be sure that everyone that interacts with our suppliers understands the importance of every relationships, just as we do with our customers, right? We want that visibility into both of those types of relationships, and we want to make sure that we have a consistent method of dealing with suppliers and customers, and it's very important to make our suppliers happy. So some of the things that we see if we don't have the right systems in place, we can add illegal suppliers. There's delays in tax forms. We have poor supplier data quality. For me, that used to mean we had incorrect structures between parent companies and subsidiaries, and it got extremely difficult to manage. We have duplicate supplier records, and of course, we could have incorrect payment instructions. A lot of these pain points can be eliminated through leveraging supplier portals, but there's other ways to do this as well. So these are just things that you want to consider. Again, your first contact and adding the suppliers, but every time you're on the phone with the suppliers, you don't want to cause tension. You want to mitigate. You want to mitigate any issues, and you want to be proactive with any issues. And having visibility into that data can help you identify trends that are causing some of these issues, which I've talked about. Again, these are some other areas, and those of you who aren't in accounts payable, these are slides you might want to print out. You might just want to go and say, hey, I was on this webinar today. This guy said we have all these issues, pain points. Do you guys have these issues? How much time do you waste and things like that? So we talked about some of the issues you can have: lack of visibility. There's just collaboration barriers, inefficient dispute resolution when you have an asymmetry of information. Maybe you're not talking to the right person. And then a pain point is you're reactive instead of proactive. So the wrong technology, all of these other 5 things just create relationships constraints, which not only increases the cost of your invoice processing, makes ineffective working capital management, ineffective cash forecasting, really can force you to lose control over how and when you pay your suppliers, which can be extremely costly. So just some top factors contributing to poor supplier relationship. So just kind of putting some numbers behind my contentions: poor data management, dispute query responses, contract compliance, and then those all lead to late payments. And it doesn't matter how big the companies are, these are pretty consistent. And just want to note, if you'd like a copy of the slides, I have a lot of references to some great research by PayStream Advisors and a few other organizations that do great research in the AP arena. So this just helps you put some context around issues and problems that you're having, might help you benchmark where you're at versus those in your industry and your company size. So it just helps with that business case and helps you make sure that you are on the path towards the best that you can be in terms of accounts payable. And so just some benefits: if we do invest in automation and process and communication face-to-face with our folks, interact with our suppliers, facilitates accurate supplier master records and banking information. Of course, that mitigates a waste of time, can mitigate fraud risk, facilitates opportunities to capture existing discounts. There's a lot of companies that don't even have visibility into the discounts that are eligible. So one of the metrics that I like in terms of accounts payable is what is the percentage of the discounts that you are taking in terms of dollars. And then you should take a hard look as to why you're not taking those discounts. And then sometimes companies aren't even able to take those discounts because it takes them too long to process an invoice. So if all your contracts are out there and your procurement people are giving each other high fives because they got some 2% net 10, they're all giving each other high fives. If you can't even process the invoice in net 10, you're going to have to go back and say, hey guys, man, good job, but where we're at right now, you got to get us net 15, net 20. You want to get down to net 10, but that needs to be consistent. And you need to also, in addition to collaborating internally with accounts payable, you need to make sure you're on the same page with procurement, understand what's in those contracts. Sometimes you can put things in contracts like payments will be made electronically. So sometimes you can do those things as well. And then the quicker you can process those invoices, it facilitates opportunities to negotiate discounts. And then we've talked about this a lot, but this is really a hidden one that I hadn't really seen until the last year or so. Mitigates time spent on phone with suppliers, resolving real or perceived issues. This is a takeaway for folks on the webinar as well. Find out how much time each of your AP professionals spends on the phone with supplier issues, and then ask them what is causing the issue. So how much time do you think just having the same information on both sides, how much of this time you think could be mitigated? And I think you'll be shocked when you have that conversation. And so just to put some specific costs here, again, just some justification if you're making that case for AP automation. You can get different numbers. The one point I will make is if you do not know how much it costs your company to process an invoice, I would strongly urge you to do that because you want to see where you're at. And then when you map things out, you can see where you want to be, where you can get to. But let's just take the survey results. So this is, $3. This is 12, over $12 an invoice. Think about how many invoices that you do. Where does that number come from? Bottom line, CFOs like that, right? 13,000. I do 100,000 invoices a year. Holy moly, that's a huge number off the bottom line. Time to process an invoice. Again, this opens up those discount opportunities. Invoice exception rate. The lower it is, the faster we process those invoices. Our goal is to have straight through processing. We like supplier invoice electronics. And then here's another area which was kind of blowing my mind when I was getting into the functionality of these AP automation systems, is percentage of invoices linked to PO. So this number is high. It's getting much higher. So I think that this is where we see a lot of time that's wasted. So really slows down that process. So this could be a driver here. So I think we work on this number, we get that number down even further. Again, where you stand depends on where you sit. Like if you're in an industry that has huge invoices, best in class, process an invoice might be $30, but all others might be $100. So you need to look at that. And again, that's only one piece of the puzzle. So I'd just like to share that as well. So now we're going to go ahead and hit you with another polling question here, which will tee up some of our remaining content. How would you characterize the level of control you have regarding how you pay suppliers? So whether you pay them by check, ACH, corporate card, ghost card, all the new kinds of corporate cards we have. So would you say you don't have any, not much, some, but you're working to gain more control? D, quite a bit, strategic focus, or I don't know. So I want to remind you that I can take your questions at any time in the questions area of your go-to webinar control panel. And again, I appreciate everyone's consideration in answering all of our polling questions. And I'm going to go ahead and close the polling question. Let's take a quick peek at the results, and then let's get into some of those pain points that we can experience, and then some of those that are driven because we don't have control over how we are making payments. So let me go ahead and close that. Let's take a quick look. And I'm very pleasantly surprised to see that 33% of you have quite a bit. That's a strategic focus. I hope that means that you have, you actively keep track of your payments mix, that you have targets for each payment type, and that you're actively trying to get folks off of your checks. Those of you who have some, you're working to gain more. I would argue that AP automation can help you do this. A lot of the things that I mentioned, just identifying those patterns, understanding any issues you have with your suppliers, building those relationships between your CFOs, your CFO and the folks at your suppliers, and then being able to communicate to them the value in changing those payment types, maybe from checks to ACH or even on a card that has a rebate. And then those of you who have none, I think you can, the one place you might want to look at is look to your procurement and your contracts. You can put that in there. I was at an AP conference not too long ago, and I spoke to one in the audience, and she said she had procurement write that in all of their contracts, and they really got not much pushback at all. And there is research out there that shows that suppliers actually are starting to ask for and prefer electronic payment. So again, those of you who have quite a bit of control, that's great. I think that's something that, again, doesn't get as much attention as it should, but we need to focus on how effective we are at dictating the type of payments that we want, or coming to an agreement with our suppliers in a mutual way in what payment makes sense to them. So thank you very much. So let's go ahead and take a look at those pain points. So we've talked about a few of these. Again, just great, interesting slide to print out. Again, get everyone involved in payments, AP, Treasury, whoever that might be. You don't have that visibility, right? Discounts lost, that's a payments pain point, so we can't take advantage of that discount. Talked about ineffective working capital management. We can be hamstrung, like if you don't have control over your payments, or you've always accepted checks. Those checks are costly. And then if we can have manual controls, cumbersome controls, we can have workflows that are ineffective and manual. So those are just some of the common pain points that I often see. So this is a little bit review. I'll go through this really quickly, but those of you who aren't in Treasury and might not be really deep in accounts payable, you want to look at this, I call it payments portfolio, extremely important. So there's really four main types: checks, ACH, Fedwire, and then commercial card, credit card. There's a lot of cards coming out there. We have a separate webinar on the different types of cards. So that's something you want to look at. So here's just some more of what's out there and what these are. I'm not going to read all these off the slide, but this is good for you to have. So again, if you want a copy of the presentation, please just drop me an email. So some of the things that we're seeing more of are these ghost cards. They function like purchase cards with reusable account numbers and spending limits. So it's not just a one-to-one transaction. We have the single-use cards, which is a type of virtual card. They receive a one-time account number to effect payment of an invoice. it's less costly, but it's also mitigates risk in terms of that information getting out there. Those credit card numbers and some of the virtual card programs allow a straight through payment through a card network. So some of the providers out there, they work with their customers to get them into these supplier networks. And if you're in the network and your supplier's in the network, then you can it's pretty slick how you can have this straight through payment card through that card network. So just a little look at the landscape, just kind of interesting to see where we're at. The good news is we're finally below 50% in terms of checks. If we were in Europe, we'd see hardly maybe 10% of checks, if not less. And then I think what we're going to start to see is we're going to start to see the commercial card. That I think that's going to go up quite a bit. And then we have ACH as well. So let's go ahead and real quick get a sense of where you're at in terms of your current mix of your supplier payments. So we have majority by checks, majority by electronic payments, an equal amount between checks and electronic payments, or you don't know. So I'm going to go ahead and leave this polling question up for just another 85 seconds or so in order to be mindful of our time. Again, I appreciate your consideration with all of my polling questions here today. Again, those of you after CTP credits for today, let's make sure you answer all those polling questions for me today. Let's go ahead and close the polling question. I'll give you another couple seconds. Okay. A couple more. All right, let's go ahead and take a quick look at the results. So good takeaway for 26% of you, majority by checks. Let's see what we can do to get away from making those check payments. See what we can do. See what's driving that. Do we don't have control over that? So that's a huge low-hanging fruit for you guys. Equal amount again between checks and electronic payments. You still have a lot of payments with checks. You need to find out why. When I was in manufacturing, the biggest barrier that we had was we had a union and they didn't want direct deposit. So there can be administrative things like that. But other than that, I would really have an active program to get folks off of checks. And then again, from the other side of it, on the AR side, for me in Treasury, I was always concerned about the remittance information. I think once you educate them and show them that they can get that remittance information effectively, can pull that right into their ERP system, bam, they will love it. I would have loved it. So thank you very much. Again, I think that payments type for me, my first thing, if I'm looking at my payments mix, is I'm looking at those checks, right? Look at those checks. I want to get people off those checks. And where I get them from checks depends on where they're at in terms of their sophistication. So it may be the case that they might go from checks to ACH, and then maybe down the line, they might be ready to do a card or a card payment. But again, a lot of the API automation solution providers, what they do is they take a look at your whole supplier list, how you're paying, take a look at the characteristics of your company, and start to help you define what program makes sense in terms of moving folks to different types of payments. Again, I think this is an area we're going to see more and more education on, and I'm certainly going to be talking about it because I think there's tremendous value there. So let's just take a look at what I mentioned earlier. Again, more survey results for you. So again, I mentioned this first one, a check is 10 times more expensive than an ACH. And so you can just use just some numbers here. So in addition to, the cost of processing an invoice, look at the cost of that payment. How much does it cost me to, do a wire, ACH, look at your bank costs, external costs, and your internal cost as well. So just some information there to take a look at. So your payment method portfolio, this is how we want to get this defined, then we want to manage it. So takeaway, what's your current portfolio of supplier payments by payment types? What are you looking for in terms of changes in percentage by payment types? If you do this, are you seeing trends in the right direction? What are the obstacles? How can we remove those obstacles? I think you should have goals relative to the mix of types to suppliers. You should, and And it's possible that you may need to change the payment types you offer, but you got to make sure that you're ready to do that. So you need to make sure that you're ready internally. So I call this doing the payments dance with your suppliers. So you got to be ready to dance. So if you're going to push card payments and everything else, you need to be able to process those efficiently internally as well. And then again, I think specific programs in place to convert suppliers to target payment types are things that you definitely want to take a look at. And besides the content I'm offering you today, there are a lot of sessions out there in accounts payable conferences, in treasury conferences, a lot on converting suppliers. So there's not as much friction as you would think. And then as you're going out and you are talking to potential strategic partners in this area, ask them, how do you run your programs? How do you convert suppliers? Do I have control over how you communicate with my suppliers? And I would argue that you still want to have control over that messaging. I would want to see the messaging. I would want to sit in on calls. I would want to get the emails that are going out. So these a lot of the partners are successful, but you want to look at how they're achieving that success. At the end of the day, that relationship with your supplier is something that you own, and once it goes sour, it's hard to get it back on track. So let's just see along that point I just made. So what do you see as your biggest obstacle to optimizing the payment types to suppliers? So if you could control that, or you could work with your CFO, your treasurer to control that, what do you believe is your biggest internal inherent barrier? You don't have leverage to how you pay. You have an aversion to electronic payments, whether you don't want to do that internally. You just don't do that. You've always done checks. Maybe your AP folks don't like to change. You don't have productive relationships with your suppliers. Your current systems and processes don't support the efficient processing of electronic payments. It's not that you don't want to do it. You just know it's going to cause a big hassle. And then maybe you do not monitor or manage how you pay suppliers. So I'm going to go ahead and leave the polling question up for another few seconds. Then we're going to go ahead and take a quick look at the results. And then I want to talk a little bit more about supplier e-payment conversion, because I think, again, that can offer us some low-hanging fruit. Let's take a quick look at the results here. And we see 43% don't have the right system. So hopefully this includes those of you who are looking for that system, and those of you who don't know that this should motivate you to go look. Hopefully I've shown you the value in having the right systems in place, and having the right systems in place is really going to empower you to have that better relationship. So again, get that 360 visibility into those relationships, those communications, see what's going on, see what those issues are, see what they are, what's happening. And then again, you have the right systems, facilitate that communication, also gives you that control. So that covers, 25%, that covers almost 75% of us. My math's a little slow today. Maybe that's 68%. So again, I just think it's important. Those obstacles you can remove through that technology and process can really help you. And the reporting, right? Attention to the trends, the information, the data, and communicating face to face. The importance of those communications that you have with each and every supplier. So thank you very much for answering the polling question. So let's just look at what I call the reality versus what might be a myth. The risk of payments fraud is actually less with electronic payments, not more. More and more companies prefer electronic payments. Technology can automate the collection and capture of remittances. Point along with that is it can automate the linking of the remittance and payment detail. And then I don't think I mentioned this. So a lot of the solutions out there are cloud-based solutions or SaaS-based. Really result in a minimal overhead for the IT department. You don't have to host the solution on premise, don't have to manage it, you don't have to maintain the updates. You can take control over that. You don't have to get resources allocated from your IT department. So those are important things to consider. And if there's a lot of, if the first thing you say internally, we need to look at more e-payments conversion, people going, no, get this slide out and say, well, wait a minute, here we go. This is not our world anymore. So how do you overcome those obstacles that you might face? I think I've hit this. Effective and efficient processes. You got to be ready to do it. You have to be a good customer. You got to be able to communicate the benefits. You can work with your e-payable solution provider. You might want to do a multi-stage phase-out program. And then you can also specify that contract method directly. So control of payment types. So again, as we can get control of those payment types we mentioned, just another good summary slide, you're mitigating your payment fraud exposures. You're mitigating the cost of payments. You can actually get money back for rebates or commercial cards. You're improving your working capital management, and then you're improving your compliance and your controls as well. This is just another survey that shows the top benefits of e-payments, which again, if you want a copy of the slides, please go ahead and send me an email. Just another thing that I think just puts some validity behind all my contentions that I'm making today. And then as far as the payments fraud is concerned, the AFP does a payments fraud and control survey, absolutely fantastic. So percentage of companies that experience actual payments fraud, 78%. Payments fraud is still rampant, not going away. Looky here. Payment methods were target. Checks, 74%. Wires, not even that close, 48%. So here we go. The probability of incidents is much higher with checks. So some closing thoughts. These are a few slides I would recommend. Supplier relationship. So this might be something that you may not have focused on before. So this is a really good slide. The onboarding process, make it seamless. You want to educate your suppliers, right? The benefits of exchanging documents electronically and the timing. You want to pay attention to your supplier contracts, work with your procurement, including payment terms, types, and timing. Make sure they understand. We need to be consistent. We need to make mindful decisions. You want to maintain open lines of communication with your suppliers. You want to minimize asymmetry of information. You want to provide proactive and consistent support with any issues, and then get that visibility and communication with your suppliers. You can start to identify patterns, be proactive, mitigate those issues. In terms of optimizing when and how you pay, you need to be ready to dance with your suppliers. You need to be ready to offer those payment types that you're pushing to your suppliers, and you need to understand your supplier's cost of accepting different payment types. That can depend on your suppliers depending on how much experience they have in dealing with electronic documents. And you need to know how to dance with your suppliers to communicate to them. You need to communicate that you understand their costs. You need to identify the conversion type that makes most sense. As I mentioned, for most folks, it might be to try to get them to a check to an ACH. Check right to a commercial card isn't as common, and it's a little bit harder to make that sell. You need to communicate the benefits to converting to a desired payment type. Again, one of them is you're going to lower your AR processing costs, and then they're going to have control over when they get paid. Guess what? That improves their working capital management, and you can partner with your e-payable solutions to improve your dance moves or dance in your place with your suppliers when that makes sense. So here we go. Kind of the cat's meow. And note, I will be publishing an article on LinkedIn tomorrow, which gives a little more color on each of these 10 ways AP automation impacts the bottom line, if that is of interest of you. And if you are not connected with me on LinkedIn, I would certainly appreciate that connection from you. And I always try and offer thought leadership across AP, AR, Treasury, also keep you informed about all of our webinars. So 10 ways impacts the bottom line. CFOs, they will love you. Mitigates your invoice processing costs. Mitigates the payment of duplicate invoices. I didn't really talk too much about that. With a lot of manual processes, I still have seen surveys that show companies with manual processes process 3 to 5% duplicate invoices, and a percentage of that gets paid out the door. Mitigate your time spent resolving supplier issues, disputes. More productivity for our AP team, right? We don't want to reduce that headcount. We just want to make our folks more productive. Allows discounts to be captured. And if we can mitigate the time it costs to process invoice, we can facilitate early payments programs, which are also beneficial to our company. We impact the productivity of employees processing invoices. We automate that workflow. We mitigate that manual time they're spending. We mitigate that time on the phone, impacts that productivity. We talked about mitigating the payment processing costs, which can include the type of payments that we're processing. We want to get folks off those checks, and we can get rebates from those commercial cards. We're going to improve our working capital management. Our Treasury folks will love us because we'll be able to give them a better sense of when we're paying. We take control over when we're paying. And then it impacts the productivity of employees, approving and affecting payments, so it goes well beyond accounts payable. well beyond. It can go to procurement, treasury, general accounting. I didn't really mention on the accounting side, can really help us be more efficient with the accounting journal entries. So as we look at all the people, processes, and system involved in accounts payable, just look at these 10 pillars, and there's probably even more. So here's your business case right here. It's usually not easy to put a business case together, but especially so if you're not looking or you're looking, these are things you want to do when you're out there talking, having conversations with your suppliers. If you already have a solution or you're implementing, these are things that you want to make sure are happening, that are driven by the technology. Obviously, it can be a combination of the technology and the process, but these are all things that you should be seeing from your investment in AP automation. A few additional resources, again, just a lot of color around what I've offered. I love this AP automation ROI calculator by Mineral Tree. Gives us a really back of the envelope calculation based on some characteristics. A lot of the studies that I mentioned. This is one white paper that I was personally involved in, the value of optimizing payments, which I think again is often missed. So again, trying to point you to the right resources, get you the information you need to get to where you want to go. So you have to be able to assess where you're at, right? How long does it take us to process invoices? What does it cost us to process those invoices? How are we paying suppliers? When are we paying suppliers? Why are we paying them this way? And then we look at where do we want to be, right? Where do we want to be in terms of our invoice processing costs, number of days to process, our payments mix, and then that gap is how are we going to get there? And that's when we start to look to our process, our AP automation. Let's look at those 10 components, some of that value proposition, and AP automation is really that fuel for those best practices that we would like to see. So I think we have time for just a few questions. And again, if I did not get to your question, I will follow up with you directly. So some people are a couple questions are around just how to do those, get suppliers to accept other forms of payment. So sometimes you have that big obstacle in place, right? It's an industry standard or it's a long time history. So I think it's time to ask those questions. I think it's part of a general conversation. It's part of a relationship conversation. So if you're doing an annual supplier review, I think that's something that you bring up in that annual supplier review in that case. And then I think in some cases, your AP automation suppliers can help you look at who the best candidates are. So one of the things that you might want to do, as I mentioned, is work with procurement, and you should have all of your suppliers listed, how we pay them, and then okay, is that the best way that we can pay them? And then you start to look at how they pay, who knows them, do they work with electronic documents? Do we have the right relationships there? And then identify some of that low-hanging fruit, get some early wins, right? And then you'll get people to invest in these programs to convert those suppliers. And again, the best way, some people are asking me how to engage folks, and I think the best way is to have face-to-face conversations. I think having lunch with folks, inviting APAR, and just showing people what's out there, right? Just maybe get them all on a webinar and let them see how things are changing. So let me go ahead and launch our final polling question as I make my concluding comments for our webinar today. So again, I hope that we've shown you the value that AP automation can offer companies of any size. I hope you see that there are many resources available out there to you, and also offer my assistance in guiding you to those resources. Again, I would encourage you to go to the Mineral Tree website. They have a lot of great resources in this area, especially that ROI calculator. And also want to thank Mineral Tree as our strategic partner today, as we sincerely appreciate their commitment to thought leadership. Finally, I would like to thank you, the audience, for your valuable time today. I would appreciate your consideration in taking the survey, which will launch immediately after the webinar is over. Thank you very much, everyone. Make the rest of your day great.